Are you struggling with marking out correctly your structures and getting good entries in the forex market? If yes, then this video is for you because I am going to be breaking down step by step of how to analyze correctly the forex market and get accurate entries.
So let's dive right straight into the video. Now, first of all, let's clear out our charts and correctly map out our structures, and then we are going to look at how to get our entries in the forex markets. Just like I always say, first of all we have to go to the weekly time frame, shrink the chart and look. Okay, currently if you look at the weekly, we are actually bearish. If you look at, you can see we are actually bearish. But if we are to analyze this current market condition here, you can see that we have our inducements right here, and then we have our internal chalk. After we have our inducements and price fails to like come lower like this, to breaking this low, that is why we have internal chalk. So after our internal chalk, what do we have? We have an inducement sitting right here, right here. We have our inducement. And why is this place our inducement? Why is this our inducement and not this? If we look closely, you can see that this from here, these two candles are not a valid pullback. They are inside bar candles. So that is why it is wrong for us to mark it as our inducement. It is wrong. So this is our inducement. This is our inducement, and clearly price took out the inducement and came straight into our order block. So basically we have two type of entries. We have the order flow and the order block. But when we get to the lower time frame, I'm going to be showing you how to utilize them properly, the order flow and the order block. So here now, since price took out inducement, we have a valid break of structure right here. So then we have our inducement sitting right here, inducement, and we have multiple POIs here. We have one here, you can see. So this one did fail to react from the market. So the only POI we have here now is this unmitigated weak. No, sorry, we have another one here too, but it also did not have enough momentum to shift the markets back up. So the last POI we had here was this unmitigated weak. You can see, if you draw it, you can see that as soon as the price tapped into it, it respected it. So then we have our next break of structure right here. You can see. So that is how we mark out our structure carefully. Break of structure. Then right here, we have an inducement sitting right here. So generally, if we are to look into this market deeper, we are supposed to look at how do we identify a valid inducement. We identify a valid inducement when we have a valid pullback. So in this case, How do we identify the valid pullback? Here we can see that this previous candle, this candle and this candle and this candle is what gave us our pullback. So this is the first candle. This second candle took out the liquidity from this first candle, and then the next candle took out the liquidity from um this middle candle. So that is why that is a valid pullback. And if you don't really understand this, and you feel you want me to hold you by the hand to push you through, then I'll drop a link in the description where you can get access to me. So right here we have our order block right here, you can see. So that is the reason why, since the market reacted to this order block, that's the reason why the market is um having bullish reactions right here, you can see. So so that means currently we are expecting the market to take out this high, which will be our next break of structure if the market actually gets to this high, because the market is dynamic. Anything can happen, and maybe it shifts and go down. So but once it close above this high with a candle body, then we have a valid break of structure. So now if we move down to our 4 hours, the weekly is the extreme higher time frame. Normally with our 4 hours, whether you're a day trader or intraday trader or a swing trader, you can easily analyze the 4 hours and then get your entries from the 15 minutes or the 1 minute chart, as the case may be. So right here, let's analyze this market for us to be able to know how the market got about shifting right here, right here. So for us to be able to predict this area, we need to analyze the past, like the past around here, to predict this future. So that is how we do it in the forex market. We analyze the past to predict the future. So currently, because the same way we did this thing, if we zoom in, if we zoom in on the 4 hours, we'll see that the 4 hours we are looking bullish. You can see we have series of lower high, then higher high, lower high, higher high, lower high, higher high, lower high. This is where we had lower low, higher low, lower low. You can see in that progression. So now let's mark out the structures on the 4 hours. Let me erase the weekly. We already established that we are bullish. Internal structure, we are bullish on the weekly. So now let's mark out the 4 hours. Right here, the first thing we need to identify is our inducement. So we have market take out inducement right here. After taking out the inducement, this was our valid break of structure. Normally it's there, then price later broke structure here, so you can mark it. It is the understanding that is important. Normally you're supposed to mark it like this and then mark this. This is our valid break of structure. So what we have here is something like this. Price transferred to this high. You understand? So now after our break of structure, we had a break of high. This is just a break of high, and then this becomes our inducement. So after our inducement, where is our major structure chalk? That is our change of character. We have our major structure chalk sitting right here. So that is when price breaks below this area, we have moved from bullish to bearish. So now inside this area now, we had a sweep of this low. Then here price confirmed an internal structure chalk, why? Because inducement after price tapped on this inducement and it failed to go up, with it creating a lower low and finally closing below the lower low here, is confirming that price is gaining selling momentum. That is why this is an internal structure chart. So now, because ordinarily if we are to mark out the um POI for this break of structure, this the POI is for this break of structure, we will be looking at this area as our order flow, then this as our order block, which you can clearly see that the market did not react to. So when the market broke out, when it got to our chalk, and our chalk is usually our last point to determine if the market wants to go bullish or bearish, and in this case you can see that the price swept our change of character zone. You can see. So after sweeping it shifted to bullish, and don't forget we already have a chalk internal chalk zone right here. So let me use our replay tool so that I can show you what actually happened right here on the lower time frame. Yeah, so now on the lower time frame, as you can see, when price swept this chalk, firstly, whenever we are at a higher time frame POI zone, we wait for a candle to close. Like in this case, this candle that swept this low and closed bullish, indicating a buying interest at that zone. So once we get our bullish indication that there is a possible buying interest at that zone, that is when we now scale down to our lower time frame, which in this case is our 15 minutes. So the same thing we did on the 4 hours is what we are going to do here. Firstly, we are going to analyze our structure, our previous structure. As you can see, if we shrink the 15 minutes, you can see that the 15 minutes is bearish. So now let's analyze where is our last inducement. We have our last major inducement right here. Inducement, and then that means that this high, since this high took out inducement, this low is a valid break of structure. We need to take out inducement for us to have a valid break of structure. So since we have a valid break of structure, where is our next inducement? This is supposed to be our inducement, this high, but since price already tapped into an higher time frame POI, which is here, and then this, and we already have a break of structure here. We don't have any other inducement. So this high, if price should close above this high, because it is this high, that gave us our break of structure right here. So if price should go and close above this high, then we have a change of character. You understand? So after our change of character right here, after our change of character, we need after our change of character, we can buy directly from this order flow right here, because price already took out change of character. So this low will be acting as our inducement. In this case, will be acting as our liquidity, because price tapped into a higher time frame POI and took out our chalk. So basically what we are having there is something like this. We have price come like this, took out inducement, broke break of structure, and then took out change of character. So we have something like this. We have break of structure, and then this become chalk. This is our break of structure. So that means we can buy, means we have a major chalk, we can buy directly once price come back here and go up, or we buy if price did not react at this zone, we can buy at the unmitigated order block zone right here. So now if we go back to the chart, you can see that price tapped on the order flow, and this is our unmitigated order block right here. So let's play price forward. And so once when price tap this area, this order flow, and did not react, then we can take a risk entry right here, since this is the only unmitigated order block, and our stop loss just below this, with our first target right here. You can see. So if I play the price forward now, let's see what actually happened. Let me play it a bit faster. So as you can see, price tapped us in and swiftly moved up. You can see. So, but don't forget that we are on the 4 hours. We already have an internal chalk. So our first take profit is this right here, is this high, which will be our break of high, because we did not take out any inducement here. So this will be a break of high, and our major target will be this internal chalk zone. So now let's play the price forward. So as soon as the price hits our 4 hours um POI, we go back to the 4 hours time frame. Now when we go back to the 4 hours time frame, we now wait to see if the market is going to react to the zone. So let me play price forward again now. Oh, that was too fast. So let's say right here. So after price gave us this very clean bearish engulfing. We had two doji candle signifying indecision right here. As you can see, indecision candle right here. Then after getting our indecision candle, the price did what? Gave us a clear confirmation that yes, it wants to go bearish, which is this engulfing candle right here. So after getting our engulfing candle, what do we do next? We scale down to our 15 minutes again, and then we look for entries. But before we can look for entries, we need to analyze this previous structure on the 15 minutes to be able to get our entries here. So how do we do that? First of all, we identify the previous inducement. The previous inducement. So this is the major inducement right here. We have a break of this high, then we have inducement taken out right here. Inducement taken out right here, and then we have our break of structure, valid break of structure right here. So since this high is our valid major break of structure, what do we have right here? So we have our major chalk right here. This level is our major change of character right here, major chalk. So now in this zone right here, we have our inducement, sitting right here. So this was a strip of high, so it did not break. I didn't mean this one break. Our inducement will have been, so we have our inducement right here. So after having our inducements, we need our internal chalk to be able to confirm that yes, we can get an entry. We don't have to wait for the major chalk before we can get an entry. So right here is our internal chalk. So because the market swept liquidity right here, you can see it swept this high, it did not break above it. That means we can buy directly from our internal chalk zone right here. If price comes back right here now like this, then we can sell. So let's play the price forward and see what happens. Okay, as you can see, price gave us inducement right here. Then we wait for price to take out the inducement and tap into our chalk zone. So let's play the price forward. Price took out the inducement and still dropped lower. Then it took out inducement here. We have a fake out right here. So price is telling us that after after it failed to close below, price is telling us that it still wants to make a deeper pullback, possibly taking out this high. So now let's play price forward and see. You can see price gave us an engulfing, took out, almost taking out the high. Then boom, you can see price tapped into our POI. So normally if we are to get an entry, I only use limit. So I would have set my limit right here and my stop loss just above this high. With our first take profit, this in major change of character, which is a 1 to 3 For a day trader, this will be our take profit, a 1 to 3 hour. But for a swing trader, we would set our take profit right here at this low. This low right here is our 4 hours major change of character. Once price breaks this low, then the price is bearish. So now let's play the price forward. You can see price hits our first take profit. After hitting our change of character, we can buy directly from any we can sell directly from any unmitigated POI. So this is the only unmitigated POI right here. So why can we sell directly there? Because price already took liquidity. So we just use our short position right here, and then our take profit is right here. Our take profit is right there. So we continue. So continue and we play the price forward. You can see price tap into that. Then if we once price tapped into that POI, we are expecting a break of low. Why? Because price did not take out any inducement. I think when price took out inducement here, then this low will be our break of structure. So now let's play price forward to see what price did. So we have another break of low right here. Then here at our break of low, we can easily buy directly at this POI, unmitigated POI. You can see that price has not mitigated this POI. So once price comes in here and mitigate this POI then drop, we can sell here. So let's see if price taps into the POI directly. So price failed to tap into the POI directly, but it gave us a valid pullback. So in this case, since price failed to tap into the valid POI, this high becomes our inducement. So now our POI is still valid to go short. So we have our entry tool here, and then our take profit is the low, which is this right here. So now let's see if price is going to take out this this inducement. So the same thing happen, similar to what happened before. Price inducement moved right here, and then this was a clear indication that price wants to make a deeper pull back. So we had a sweep here of this low, and this becomes our new inducement. But this high is also still a liquidity zone because it does not have imbalance right here. We don't have any imbalance right here. We don't have any imbalance. So most likely price will take it out to mitigate our higher time our order flow. So now let's play price forward and see what happens. So as you can see, price tapped into our order flow and swiftly dropped lower. So now let's play price forward and see what happens again. So since price drop took out in this one right here, we have a break of structure right here, break of structure. Then after price took out our break of structure, normally we can sell right here. You can see price, you can sell right here. You can see that price tapped into the order flow and kept on dropping. So in a market, there is no need to be afraid or have fear of missing out. There are going to be multiple opportunities trading with this SMC strategy. And once again, if you want me to hold you by the hand and show you step by step how to apply this strategy to the market and make consistent profit, I will put a link in the description where you can be able to get access to me. So now let's play price forward. So right here, since price mitigated our order flow right here and drop and created a new order flow, let's play price forward to see what is happening. So okay, yeah, so right here we can also sell right here. You can also sell right here. So let's see what the price does. As you can see, the price dropped swiftly. So now we have another unmitigated order flow right here. We have another unmitigated order flow right here. So you can see price did not tap immediately. Let's see what happened. You can see, so right here there was an inducement right here based on candlestick pullback. We have an inducement here, so that means we can short again right here, and our stop loss is going to be at that high and our take profits right here. So then let's play the price forward. You can see price respected our analysis. You can see, so that is how to mark out your entries and get good reach to reward from the market. So you can see this is a 3 hour and this is a 10 hour trade, this is the 8 hour, and this is a 15 hour trade. So that will be the end of this video for today. Don't forget to like, share and subscribe, and also put in the comment section if you understand this video, because this video was actually made a request by a subscriber. So if you need any other thing, comment what other parts of the forex market you don't understand, and I will gladly make a video about it. Thank you for your time. I really appreciate. Don't forget to subscribe. Once again, don't forget to subscribe. Let's grow this channel together. Thank you.